Welcome, guys. What I'm trying to do here is just help you understand the relationship between the financial statements. So we have four financial statements: the income statement, statement of retained earnings, balance sheet, and then statement of cash flow. So we write our financial statements in a very particular order. We always start with the income statement because revenues minus expenses are going to either equal net income if revenues are greater than expenses, or a net loss if expenses are greater than revenues during a particular period. Notice here that I did put the period for you, so this is a very common period of time to look at for the year ended December 31st, 2018. December 31st is going to be the last day of their year. So what I wanted to point out here is that within the financial statements, whenever you see a single line, that means we're subtotaling the numbers above. So right here you see revenues minus expenses. You don't always see the brackets showing minus. It's just assumed that the reader knows that the expenses are subtracted from revenues to calculate net income. And down below, after the 20,000, you see that this is a double underline. So that means that we're not going to be adding or subtracting anything further from that number within this particular financial statement. The information from the income statement that we need, so we need to complete the income statement just to calculate this net income number, because net income is needed on the statement of retained earnings. So we need to figure out how much retained earnings changed year over year. So we're going to start with our beginning balance of retained earnings, and that's going to come from our opening balance sheet or our opening retained earnings statement. So that's going to be our 12/31/17 statement of retained earnings. Then we're going to add in, sorry about that. We're going to add in our net income from our income statement, the 20,000, subtotal, and then we're going to subtract out those dividends that have been declared during the period to calculate our ending balance of retained earnings, which is our balance as of December 31st, 2018. We have to prepare our statement of retained earnings before we can get on to our third financial statement, which is our balance sheet, because in order to balance our balance sheet, which is showing that assets indeed equal liabilities plus owner's equity, or stockholders' equity in this case, from our accounting equation, we need that ending balance of retained earnings. So we have our assets written in liquidity order. We will have a classification, so we will be showing current assets separate from our long-term assets. Please refer to the textbook for further information versus current and long-term. And we're going to classify our liabilities the same, with current and long-term separated. We're going to calculate out our total assets, 50,000, and we're going to calculate out our total liabilities, 9,000, and add in our owner's equity amounts, or stockholders' equity, if you will. And notice here that retained earnings is the ending balance of retained earnings. So we need to fold in our net income, subtract out our dividends to get what we ended up with and what our balance is as of December 31st, 2018 for retained earnings. Just as we're reporting all of this information, assets and liabilities, as of that specific date, year end, 12/31/2018. If your balance sheet is not balancing, so notice here that 50,000 total liabilities and stockholders' equity equals total assets of 50,000. If your balance sheet is not balancing, more than likely you probably are using the wrong retained earnings balance. So double check that you're using the ending balance of retained earnings. from the statement of retained earnings. On to the statement of cash flows. So in the statement of cash flows, we will be using net income from the income statement again. Because what the statement of cash flows is doing is converting our income statement, which is prepared on an accrual basis, we're going to talk about that in chapter 3, to a cash basis. So we need to know, at least in the operating portion. So we need to incorporate that first, and then we're going to adjust and convert this net income to a cash basis so we can figure out whether or not they had net cash provided by or used in each of the activities. So notice here, we have net cash provided by. We use that term provided by to mean that we've received more cash for this category than we've paid out in cash. So we had positive cash flows from operations, from the normal operating activities. For the investing activities, notice we have used in. So they spent more on these investing activities, so purchases of long-term assets, sale of long-term assets, the cash proceeds, that is. And we ended up with a negative amount. So they have more outflows than inflows, hence the used in. The last category is anything having to do with the owners and long-term debt, so financing activities. And we have net cash used in financing activities again. To calculate the next calculation, net increase or decrease in cash, what we're going to do is we're going to add up or net out the three amounts: the net cash provided by operating activities, net cash used in investing activities, net cash used in financing activities. So if you look over here, I can do a little calculation off to the side. 35,000 positive, subtract a negative 2,000, subtract a negative 14,000 is going to give you an increase or a positive $19,000 change in cash. So that's your change in the cash balance. The last two steps are you're going to first include your your beginning balance of cash, what you started the period with. And where are you going to go? You're going to go to your opening balance sheet, which is your prior year balance sheet, dated 12/31/17. So at the end of 2017, you had $6,000 in cash. You started 2018 with that $6,000 in cash. You increased your cash balance by $19,000 for the year. So we're going to net these two amounts, and we're going to add in this case, and that's going to get us to what our ending cash balance is, and that will match your balance sheet ending cash balance. So notice here, 25,000, 25,000. So we know that is correct. I know this can seem complicated, but the more you practice it and the more you use some of the study plan questions from it and your homework questions, it'll be a lot easier for you as you move along. What I do recommend doing is doing some calculations off to the side, writing them out so you definitely know what you did so you can repeat those steps in a later practice or even on the test. Good luck. Let me know if you have any questions.